Hey guys, Bill Soriano from Pittsburgh, doing a quick video here on my YouTube channel, which I will drop in my Forex Smart Money Trading Academy group here. So, and again, if you get value out of these videos, please hit that subscribe button, that like button, and also drop a comment down below as well, because that helps out. So what we're going to do today is we're going to go over the quick trade recap on the 3 winning trades that I posted in the group yesterday. And those chart markups are here in the group. Right, 3 winning trades along with a near miss in GBPAUD. So 3 winning trades were in CJ, GBPCHF, NJ, and then the near miss in GA as well. So we're going to go over these recaps. Now, so these will be on the 15-minute chart, and we'll be reading the 15-minute structure to identify where to enter the trade, right? We're looking for a change of character, a break of structure that causes a change of character, and then we can identify where we want to set our limit order on the 15-minute chart. So now, remember, prior to this all happening, right, over the weekend, we've gone through, and by the way, I will do this tomorrow on Sunday, and I will drop that video in here as well. We go through all 28 Forex pairs. We identify the daily trend bias, right? We identify the 4-hour order block with that bias, right? And then we mark our point of interest inside of that 4-hour order block. And that's where we set our alert and wait for price to hit that alert, right? Now, I also, this is really a pure smart money concept strategy. However, we do use a couple indicators just to help you to identify the trend and identify the order blocks, okay? Because that's where your learning curve is going to be at. The main learning curve is going to be on the 15-minute chart, which is why I want to make these short videos here showing you how to read that and see where to get into the trade. Now, remember, these order blocks that we mark up on the 4-hour chart must lead to a break of structure. There must be an engulfing candle after the banker candle, and they must cause imbalance. Also, they must not have already been mitigated or touched. And again, when the 4-hour POI, point of interest alert, goes off, we drop down to the 15-minute chart, and we wait for our entry model, which is the lower time frame flip. So that's already all happened on these 3 pairs here, right? That I'm going to go over. So the first one is CADJPY. So this teal area here, of course, is our order block that we identified on the 4-hour chart. This blue line, okay, is our point of interest. Okay, so that's the area that we want to get hit. So we don't just we use our, when we identify our and I go over this on the other videos, but when we identify our order block here, we use that 4-hour banker candle. We use the open of that candle, which is that red candle right there, basically, to identify where our point of interest is at. Okay, so I go over that. I'll go over that tomorrow, though, when I show you that how we mark up the order blocks. So now what we're going to do is we're just going to play this recap here. So this was basically back on Wednesday morning, 11:15 a.m. So let's just see how this actually happens here. So boom, we see right there, price comes down. It hits our point of interest, right? Hits our point of interest. So when it does that, at that point, we have to decide where we want to put our break of structure to identify our change of character. Okay, so at this point here, we would probably want to put that break of structure right above this wick right here. Okay, and then let's just see what happens here now as price continues here. Okay, what we see here, price goes a little bit lower here. Okay, and what they do is they grab some liquidity down here, and you can see that wick. Okay, so once that happens, once we get a new low, we don't need a break of structure in this situation. We just need a new low. Okay, once we get that new low, now we can identify this wick right here, this area right here, as our change of character. We're going to look for a break of structure right there. Now, in order to get that break of structure, we need a candle to close above that line. Okay, so right there, we get a candle close above the line. So we get our change of character or a break of structure. It's not a very good close though, right? But we get a better one right here. So once that happens, okay, and this is really where your learning curve is going to be in this smart money strategy, is reading the market structure on the 15-minute chart. It gets even harder on the 5-minute. That's why I don't go to the 5-minute myself. I stay on the 15-minute chart. A lot of people drop down to the 5-minute and even the 1-minute. I'm not that good yet. Okay, I can read the market structure pretty well on the 15-minute. I don't want to go down to the 5. So you won't want to do that till you have a couple of years experience and you've already been taking trades and you're making money and you're always in profit. So let's look at this now. So we got our break of structure, which is our change of character or our choke, right? That's this close right here. So once that happens, now we can identify where we want to get into this trade. So we can essentially set our buy limit order right here, right? So right at that wick there. So this area, this candle right here is the candle that we use now to identify our order block on the 15-minute chart. Okay. And now we set our limit order right at the beginning of that zone. Okay. Right at the beginning of that zone. So all price has to do is come down into that zone for us to get into that trade. Okay. And then what we can do is here, we can use our tool here to say, okay, price comes down, there's where we're going to get in. Now, where's our stop loss go? Okay, so our stop loss, a lot of people just put it right below that wick right there. Okay, but what we do is, or what I do is, with my strategy is I use the 14-period ATR or the average true range, and that's what you see over here. Okay. And it's a little bit hard to see there, but this is it right here. Let's see if I can just get this to move down. Okay, anyway, you can see right here, you can see how that number in the bottom left-hand corner says 0.101. So that's 10 pips. So that means that we have right here, we have a 12.5 pip stop loss. So we're going to take this all the way down to 22, 23 pips. I don't know exactly where I put it for the trade. But once we do that, we then know that we want to shoot for a 1 to 2. And then we get out. So there's our 1 to 2 right there. And we get out of the trade. Okay. So let's just see what happens here now. Say we see price makes a move up, right? Price makes a move up. Now we're not in this trade yet, right? Price makes a move up. And that's fine. If it just keeps going up, then we won't get in the trade, right? Okay, now right there, price comes down right here. And what happens? We get into our trade, right? Our limit order gets hit. We get a little bit of drawdown, right? But we don't get stopped out. Why don't we get stopped out, guys? Because we pad our stop loss with 1 times the ATR, the 14-period ATR, okay? Now, in this trade here, had we just put our stop loss below this wick here, we would have probably gotten stopped out there at a loss. And we would have missed out on this winning trade. Okay. Now, I've been keeping track of this, as you know, for the last couple of weeks here in July. And right now we have 16 winning trades and only 6 losses. However, 4 or 5 of those winning trades would have been losses had we not padded the stop loss here like we do it. Okay, so that's why we didn't get stopped out, because we pad our stop loss 1 times the 14-period ATR. That's the average true range for the last 14 candles. Okay, so it all matters what time frame you're on. It's different on every time frame. We only use it on the 15-minute time frame because that's the time frame we use to take our trades, right? That's where we look for our entry model, which is the lower time frame flip. So we got our breakup structure, we got our change of character, we identified our order block to set our buy limit, and we got into this trade. Now let's see what happens here. Right, there it goes, and right there, price moves up. And we're out of this trade with a 1 to 2 risk to reward ratio trade. So if you risk 1% of your account, you're gonna make 2%, a 2% gain. Okay. If you risk 2% of your account, you'll make a 4% gain. Okay. But using this method, using this trade plan, or this trade management plan here, whatever you want to call it, you can actually lose 2 out of 3 trades and still break even. Okay. Now, a lot of people will try to confuse you with this. I've even experimented with myself where I exit half the position when I'm up by 2R, and then I move my stop loss to break even. But what I noticed is over time, what happens is most of the trades, after they make that 2R gain for you, they come back down to your entry and you basically get stopped out at break even. Okay. Or if you don't move your stop loss to break even, you get stopped out at a loss and the trade is a wash. Okay. So the best way to do this is just to get out at a 1 to 2, right? If you risk 20 pips, you want to get a 40 pip. You want to get 40 pips on the upside and get out. Risk 30 pips, you got to get 60 pips. It has to be a 1 to 2, and that's what we use. And there it is right there. There's our winning trade. Okay. See something here real fast. What did I do there? I think yeah, guys. So this is what that ends up looking at. But I also I'm pretty sure that I had a stop loss of about 27 pips, not just 22 on this trade. So we actually had to get about 55 pips on the way up, which we easily did. This was one of those trades where we could have gotten a 1 to 3, right? But again, you don't know. So I've been keeping track of this in the trade journal here to determine how many of these 1 to 2 trades would eventually go to a 1 to 3, a 1 to 4, or a 1 to 5 before they came back down and would have, basically stopped you out. So, like I said, this was one of those that you could have gotten more on. But again, you just don't know. A lot of the trades, again, I'm going to show you, once they go up by 2R, which means 2 times your risk, right? Once they go up by 2R, they end up coming right back down to where you got in. And a lot of times they actually go a little bit lower and you would have gotten stopped out at a loss. There were about 4 or 5 trades like that that would have been losses had we not just taken our profit at 2R. Okay, so that's something you have to test out for yourself. I'm doing it for you, and I'm going to show you the results of that at the end of the month. Okay, but right now, suffice to say, we're at 16 wins, 6 losses. Okay, but some of these pairs have gone further than 2R gains, which of course we missed out on that because we get out at 2R. So that's basically how this trade set up. And the reason why my stop loss was a little bit lower than I just showed you is because it all matters when you look at the chart, because as each one of these candles closes, the 14 period ATR here down in the left-hand corner is going to change. So, I set that 14 period. I use the 14 period ATR. I use what it currently is whenever I get to the chart and set up the trade. Okay. So what time I did that, I don't exactly know. So that's why my stop loss on this one was a little bit lower. But again, it was an easy one. It was an easy 2R win. Okay. Okay, so the next one I want to go over now is the GBPCHF trade, okay? And this is going back to Wednesday, 9:30 a.m. And by the way, you can see here's another here was a winning trade from last week with this pair right here, as you can see. You know, so let's see what happened now at this time. So here again, this blue line here, this blue area here is our order block, and that blue line is our point of interest that we're waiting to get hit. So boom, right there, the point of interest gets hit. Okay. Now, when that point of interest gets hit, okay, then it immediately goes lower as well. Okay, so now at this point here, and again, this is where the learning curve comes in, is knowing where to set this break of structure to get that change of character. So probably at this point here, we would want to set that right above this wick here. Okay, so we have a couple red lines here, so it's getting a little confusing here. Let's just get rid of these. Okay, now price then, you know, makes a move up, right? We don't get our change of character. We don't get that break of structure to the upside. That's what we're waiting for. Okay. We don't just take the trade because price hits our point of interest, right? On the 4-hour chart, we drop down to the 15-minute chart. Okay. Now here we see the price goes lower. When price goes lower, that gives us an opportunity now to change our break of structure or where we need to get our choke. Okay, so we'd probably move it down to this area here. Some people might move it all the way down to here or here. You know, it's hard for me to remember actually where I put it at this point. Right, so right there you see we get a move up, but it doesn't break structure, right? See how price just moves up and down in this range here. And we don't have to do anything yet. We haven't gotten our change of character yet. Okay. Now we see here, let me just wait 1 minute here. So what happened here was when price makes this low right here, I moved my change of character right to here. Okay, we got a new low. So now this is where I needed to see price move up to break structure to the upside before I would look to get in this trade. And that's exactly what happens right here on this candle. So once this candle moves up here, okay, now we can identify this order block right here on the 15-minute chart as our entry, okay? And so that's where we would want to set our buy limit. So essentially we would come here, right? Just look at that. And so we would want to set our buy limit right there. Okay, now again, our stop loss is that wick plus, if you look in the bottom left-hand corner of my screen, you'll see my ATR is 10 pips. Okay, so in this one here, I actually set this at 30 pips. Okay, so if I was risking 30 pips, what would I want to get to the upside, right? If I risk 30 pips, then I have to get, to make this a 2R trade, I have to get 60 pips to the upside, right? So we was kind of right about there. Okay. So here at this point right here, price came down, right? We got into the trade. That was on Thursday at 10 a.m. Okay. And then right here, we got out of the trade with our 2R gain. Okay. So I kind of, you know, this is where the learning curves get, guys, where to set that break of structure. Okay. And so once we get that new low here, I moved my choke line right to here. Now, you know, I'll be honest with you. Some people may have put it where I initially put it, right? And if that was the case, then this trade hasn't actually gone off yet. But I actually used this area right here because as you can see here, to identify a choke, what do you need? You need to have a move down, right? Then you get this move back up to here, right? Okay. Then you get a move down lower. So that's why I picked that high right there. Actually, I picked the high right here for my change of character. But either one of these would have worked because this candle moves up and it breaks structure right there. Okay, so if you would have picked either one of those, you would have been okay. So this was the trade in GBPCHF. This trade here is in NZDJPY. This is the other winning trade that I posted. And this is right now, we're at Thursday, 7:45 in the morning. This is our 4-hour order block. This blue line is our point of interest, right? That's where we're waiting for price to hit, right? So right there, our point of interest line gets hit, right? And so at this point right here, this red line is where we identified our choke. That's where we needed a break of structure to get our change of character, okay? We picked this area because you can see this consolidation here, right? Price goes higher above that consolidation. And this wick right here is basically the low of that consolidation area. So that's what we're looking for price to break structure now to the downside, give us our change of character so that we can what? We can identify where our order block on a 15-minute chart and where to put our sell limit order in this case. Okay, so this one happens a little bit faster. So right there, you see price comes down, it breaks structure to the downside. Actually, once price makes a new high here, some people, we could actually maybe change this change of character line to right here. But either way, you're still good, right? Either way, you're still good. Now, if you see here, our price comes outside of our order block slightly, right? If we go to the 4-hour chart, though, at this point here, price really doesn't close outside of our order block, right? So it doesn't invalidate that order block, okay? Even if it does, though, there's probably another order block right up above there. But it doesn't invalidate our order block, okay? So now we're able to identify this candle right here. This candle right here is how we identify our order block here on the 15-minute chart. And our entry is basically right at that wick. So that's a yellow candle. It's actually an up candle, right? So it would be a blue candle if we didn't have our indicator on. And then we get a nice shift candle confirmation as well right after that. And that leads to our break of structure or a change of character or choke. So now we want to get into this trade right here, right? Our stop loss, okay, so there's the wick. We look at the ATRs, 10 pips, right? So see here, in this case, we used a stop loss of about, I think it was 17 pips, if I'm not mistaken. It was probably 17. I think it was 17.1 pips. So all that means is that when I got to this chart to set up this trade, right, the 14-period ATR wasn't as much as it just currently was. Okay. So that's where I set the stop loss. And then let's see what happens here. Price comes up, boom. Okay. So I believe that right there we get into this trade. See? So right here, we're into the trade, right? Our sell limit gets executed, very little drawdown at this point, right? And price moves down, and there, we're out of the trade. Okay. We're out of the trade with our 2R gain, right? And of course, right after that, look what happens. This is one of those trades where you get your 2R, and this is why we get out. Because look at what happens, okay? Actually, our 2R game is right here. I didn't have that set up right. So on this trade here, we risked 17 pips to get about 34, 35 pips, right? So right here, we get out of this trade. Now, could we have gotten a 1 to 3 on this? No. See, if we would have tried to get a 1 to 3 on this trade, what would have happened? We wouldn't have got it. Price would have moved back up, stopped us out at a 1% loss. So this would have ended up being a losing trade had we tried to get a 1 to 3, had we tried to get a 3R gain. So this is what I'm documenting, you know, with this block of trades that I'm doing here in July. I'm keeping track of whether or not I could have gotten a 3, 4, or 5R gain instead of just a 2R gain. And I'm also looking to see, had I tried to do that, how many of these trades would have ended up losing. And this is one of them. If you try to get a 3R gain, you lose this trade. Okay, so that's why right now we're just getting a 2R gain and we're out. With the 2R gain, we're able to lose 2 out of 3 trades and break even. So we break even with a 33% winning ratio. Okay, now right now, okay, we're at 16 wins and 6 losses. So our win ratio is much higher right now than 33%. But we can do as bad as a 33% win ratio and still break even. Okay, so let's move on to the next. So the last pair I'm going to show you here is the one that did not execute. So this trade didn't execute. This was in GBPAUD. So you can see here we have our 4-hour order block identified. We have our point of interest, which is that blue line there. And you can see what happens there. Right there, we hit our point of interest. So at this point here, most people, I think, would put the break of structure to the upside for the change of character, probably right around here, right? Anywhere in this area here, most people would put it, okay? So right here, you get a move down, right? Makes a new low there. So probably right here is where you can put it. So again, this is where most of your learning curve is going to come in, where to put this break of structure, right? And you're only going to learn where to put it by practicing it on demo and seeing what happens, okay? So, but we know here, when price moves lower, now these wicks right here are kind of our new area where we're looking for a break of structure to get a change of character to the upside, okay? So let's say okay, now price goes even lower, okay? We could see price moving lower. Now our change of character can be moved down to here, right? We get that wick right there. Price now starts to come back up. Price now goes lower, right? We get price moving lower. Now we can actually identify this area right here for our break of structure to the upside. So you see how you have to read this market structure, and as the structure, you know, recreates itself here on the 15-minute chart, you're going to change where you might get into this trade at, or where you could see here, price keeps moving up, it keeps wicking above that break of structure line, but it never closes above it until right here. Okay, now once price breaks structure right here, we get our change of character. Now, there's a couple trains of thought here. You have 2 order blocks here that you can identify on the 15-minute chart. You have this one and you have this one lower. Okay, so if you were to get in at this area here, you would want to set your stop loss down below this wick. Okay, but what could be scary, or what could be bothersome, is that you have all this imbalance down here, all this improper price action, telling you that price may move back down to that area, right? And that would stop you out of this trade. So right now, let's see what happens. So at this point here, price has not hit either of these areas, right? Okay, so price still hasn't hit either of those areas. And what happens now? Now you get another break of structure to the upside, right? And so now you actually have another area here that you could identify, right? So let's keep this going here. We can see here price just continues to move higher. And so we never get an opportunity to get into this trade, right? No matter how we look at it, right? So this is just one of those situations where you know, price just takes off, it doesn't come back. That doesn't mean it won't come back next week, right? Maybe next week it moves back down here and this trade goes off. Of course, every week we reset all the charts though. We identify our new trend, our new 4-hour order block and all that stuff. So I'll be going over that tomorrow with you, okay? So in this video here, right, I just wanted to go over those 3 winning trades for you. I wanted to do a quick recap of CADJPY, GBPCHF, NZDJPY, and the near miss in GBPAUD that we had, that I just showed you in that last chart. Right. So tomorrow I'll be dropping another video here in the group, Forex Smart Money Trading Academy group, and I'll be doing the complete overview for next week. Right. So what will I be doing? I'll be going through all 28 Forex pairs. I'll be identifying the daily trend bias. I'll mark up a 4-hour order block inside of that. You know, going with that daily bias, we'll then identify our point of interest inside of that 4-hour order block. And that's where we'll set our alerts on all of the pairs that we can do that on, right? And then these order blocks will have to have a break of structure, have an engulfing candle, and cause imbalance. Also, they must not already have been mitigated or touched. Once the 4-hour POI alert goes off, we drop down to the 15-minute chart, wait for our entry model, which is the lower time frame flip. And that's what I just showed you today. So guys, very important. If you got some value out of this video, subscribe to the channel, hit that like button, leave a comment down below. And, you know, if you need your, if you still haven't registered for your 9-part Smart Money Concepts video series, drop me a message here and I will send you the link to register for that. If you're ready to get started with our community, join our community, get access to everything we have, right? Try that out for 7 days. The company has a 7-day money back guarantee. So if you're not happy with everything that you get, you can ask for your money back from the company as long as you're within that 7-day window. So it's Bill Soriano from Pittsburgh. Until tomorrow, have a great day, guys.